Hello everybody, I Tushar Jain, CFO and Research Head of Ajayastromoneyguru. Welcome all of you today on 17 January 2022. In this episode, I will discuss about my views on Indian stock markets and what all things you need to consider for next few trading days. So currently the Nifty and Bank Nifty are trading in a very volatile zone. Nifty is trading at around 18,300 and Bank Nifty is trading at around 38,238. Nifty is up by around 44 points and Bank Nifty is down by around 130 points. So the banking stocks are showing some profit booking in the today's session. From the total of 12 constituents in the Bank Nifty, 6 stocks are showing weakness and 6 are showing positive move. The major banks which are showing weakness are HDFC Bank and ICICI Bank. Although the HDFC Bank's result was not very bad, but still it is showing some profit booking from the higher levels. And if we also see the global markets, we can see that on the Friday session, Nasdaq was up by around 0.60%. Dow Jones, on the contrary, was down. The Nasdaq was up by 0.60%, while the Dow Jones was down by around 0.56%, and S&P 500 has been traded flat. And also in the today's morning, Chinese GDP data have been released and they were above the expectation of 3.60%, and the actual data was at the level of 4%. Therefore, the Chinese market are showing positive move, but if we see the Hong Kong market, it is showing profit booking. And almost all the Asian markets are showing positive move except Hong Kong market, and currently Nifty is also showing some positive move. But if we see the Bank Nifty, it is showing some profit booking. Also, if we see the FIs and DIs data of the Friday session, we can see that FIs were again net sellers in the cash market, and they sold by around 1600 crores in cash market, while the DIs were net buyers by only 371 crores. So on the Friday session, we can see that DIs were not that much active in terms of volume, as they have net bought only by around 370 crores, which was very low comparing to the net selling by the FIs of around 1600 crores, due to which some uncertainties can be seen in the today's market also. And if we see the option chain data as of now, then we can see that for the weekly expiry that expire on 20th January 2022, and if we see the Nifty's option chain, we can see that highest open interest in call options is at the strike price of 18,300, and if we consider the highest open interest in put options, it is at the strike price of 18,200. Also, the highest addition in call options is again at the strike price of 18,300, and if we see the highest put additions, it is at the level of 18,300. So this can be interpreted as Nifty is expected to be and if we see the current market price of the 18,300 call option, it is at the level of 107, and if we see the current market price of 18,300 put option, it is at the level of 102. So we can consider the range of around 18,100 to 18,500 for especially this week, according to the options chain, as on the strike price of 18,300, both call writers and put writers are holding heavy positions, and today they have added heavy amount of both call writings and put writings. Therefore, it is advised to go for stock specific trades rather than indices. Although the overall sentiment of the Nifty is expected to be positive only, but still you can consider stocks like TCS. TCS have recently crossed its very important resistance at the level of 4000, and it is currently trading at around 4012. So you can consider TCS for next few trading days, and also next around 10 to 15 trading days. Also you can consider Maruti Suzuki. Maruti Suzuki is currently trading at around 8270 and is up by around 186 point, and today it is very near to the very important resistance at the level of 18,330, and in fact it has crossed this level in the daily high also, on the intraday basis also. So therefore you can consider this Maruti Suzuki, and it is expected to show fresh breakout. Also you can consider ICICI Securities. ICICI Securities is currently trading at around 824.45, and it is also expected to show further positive move in next few trading days. So I hope you liked our analysis and our views. There is a standard disclaimer also. All the information and analysis provided by us are purely personal, and neither analyst nor channel will be responsible for your profits and your losses. It is advised to kindly consult your financial advisor as well as your wisdom before taking any trade. So that's all for the today's episode. See you in the next episode. Thank you and good day.